Of declines. We're still only at $56.77. Now, the ruble is an interesting one. We see the dollar 1.3% weaker. It's a stronger ruble. This as Congress looks to weaken those sanctions potentially on Russia, and that has Russia's ruble rallying a little bit. Not so for the renminbi. It is trading at 6.94, so unchanged obviously on the session, but the peg has been weakened. Let's move to GMM and have a look at some of these other asset classes. So as you can see, right across Europe, you have equity indices pretty much lower across the board. The Argentine Merval is stronger today. British pound has been strengthening as well on this idea that there might actually be an agreement today out of the cabinet and a potential little light on the horizon when it comes to Parliament. And then Mexico is another interesting one, of course, bouncing around on those oil prices and trade talks. But now we have more Democrats saying that this USMCA is going to have to change before it passes Congress. It is not going to pass as is, and that has the peso rallying along with the potential for some interest rate movement at the Bank of Mexico's meeting tomorrow.
Funny, you said it. Sterling and the euro advancing on the dollar. This as a Brexit deal comes closer to Parliament. We have this meeting which we're waiting for the announcement on. Could come at the top of the hour in around 30 minutes. And then we wait to find out when exactly Parliament is going to vote on this. Stephen Barrow is the head of FX strategy at Standard Advisory and joins us now in the studio. Good afternoon. There's a lot of sort of political noise around all of this. Sterling, very, very difficult to trade. I've got the euro-sterling option volatility 3-month vol here. It seems that one of the easiest ways to take a position in all of this is in vol, because taking a position in the underlying pairs looks really difficult right now.
Directionally, yeah, it is obviously quite tough. Volatility's been obviously rising for sterling as we've got closer to this point. I think it probably still can go higher still. I guess the sort of probably the key issue in terms of volatility is whether, when we do come to a parliamentary vote, whether it's easy for the market to determine beforehand whether it's likely to be a yes or a no to the deal. Because if it really is close, if you really can't tell beforehand what the outcome is likely to be, then we face a similar situation to when we had the 2016 Brexit referendum, and you just remember that volatility that we saw over that result. So that would be the boom, if you like, for vol traders if we end up in that sort of scenario.
If I take a look at the direction, though, and this is where it starts to get a little bit more tricky. I've got the euro-sterling 3-month risk reversal here, which kind of captures some of the event risk that we now face going forward with the Brexit story. And at the moment, that points to a stronger euro. Is that the position you would take at the moment?
I would tend not to. As you say, it would be obviously a brave position, perhaps, to take a directional view at the moment. I think when this is all over, and who knows when it might be over,
that will be.
when it is all over, sterling will be stronger for it, because I think what is most likely is that the deal will be accepted, maybe not in the first parliamentary vote, and maybe not without some sort of problems beforehand and maybe even subsequent to that vote. But I think, broadly speaking, we will accept the deal, and that will make sterling get stronger, just on the basis that, as you mentioned, with volatility, a lot of that reflects people hedging, and hedging potentially, and specifically, I think, the risk of sterling being very weak. So as they take those hedges off, so sterling is likely to get stronger. So my view on euro-sterling, for instance, is we're more likely to go to 80 pence than we are to 90 pence plus.
If you take the very major currencies out, Stephen, are there pairs that you like?
In terms of the broad currency horizon, at the position at the moment, I think in actual fact most of the interest, or most of my attention is actually on some of the more minor currencies. Not if you look at the euro against the dollar, for instance, and the dollar against the yen, they are still broadly quite stable currencies. Sterling, as we mentioned, people don't really know what to do with because of the Brexit uncertainty. So I think, you know, some of the other currencies that have been maybe in the shadows a little bit have actually started to look a little bit stronger. So the likes of some of the Scandinavian currencies, the Australian dollar, the New Zealand dollar, I think maybe those currencies don't quite have some of the, perhaps the uncertainties that surround some of the major currencies at the moment. Obviously the euro dogged as well by the Italian issue, the pound by Brexit, and so maybe those minor currencies are actually the more tradable ones at the moment.
Well, are they buys, Stephen, or how would you trade them? Because wouldn't money just flow home if there were to be some kind of an unexpected scenario, either here in the States or in Britain even?
No, I mean, that's obviously very possible that you could see a sort of flight to safety as far as certainly as far as the dollar is concerned, were we to see some significant upsets. But I think, you know, looking ahead over the next sort of few weeks, perhaps few months or so, I think we're maybe not going to see those upsets. I think certainly on the US side, for instance, the meeting between Trump and President Xi, you know, may provide something slightly more positive on the trade front. And I think with that in mind, some of these are, say, minor currencies that maybe have been under pressure before against the dollar, they start to look a little bit stronger. So that I would look at those currencies from the buy side.
Let's just talk about the dollar, though, for a moment, if we might. Jerome Powell, Jay Powell, speaking in Dallas a little later on this evening. In your mind, is the risk to the upside on US rates in terms of how the Fed is going to be positioned? We find ourselves in a situation where over the last 24 hours we've had Greenspan talking about inflation and the upside risk to it. Yellen's talked about the fact that maybe it's 3 to 4 rate hikes next year, whereas the market pricing is currently 2 to 3. If Powell sounds in any way hawkish tonight and the market starts to upgrade its assessment of what the rate hike path looks like next year, what's the upside in the dollar?
Well, I think there's upside to rates. I'd be surprised, in actual fact, if Powell were necessarily to suggest that, to be quite honest. But my view is that the Fed will raise rates, you know, each quarter through next year. So I'm looking for 4 rate hikes for next year, and for the sorts of reasons, for instance, that Greenspan mentioned, which is that I see inflationary pressure tending to rise. I think that's where the risks lie. So that's, you know, 2 more rate hikes than the market is priced in, which would seem, in some senses, to imply dollar upside. At the same time, what we've seen in the past, certainly we saw in 2017, was US rates going up and the dollar going down. And so there's a reminder there that just because interest rates go up doesn't necessarily mean the dollar goes up. And I think if interest rates are going up primarily because of inflation rather than growth, which I think will be the story next year, then I think that that's actually more likely to be negative for the dollar. So I have a higher rate view, but a lower dollar view.
Real rates potentially going down. Stephen, nice to see you. Thank you very much indeed for coming to see us. Stephen Barrett joining us from Standard Advisory. Let's get a First Word News update. Here's Courtney Donahoe.
Hey there, Guy. Let me get you caught up. A senior House Democrat warns that President Trump's new trade deal with Mexico and Canada will need changes to win approval. New Jersey Congressman Bill Pascrell says there will need to be more enforcement for the administration to get the votes from Democrats it needs. The trade deal won't be voted on until after Democrats take control of the House in January. In Northern California, one fire official warns that more than 100 people may have died in the state's deadliest wildfire ever. The death toll has now climbed to 48, and about 200 people are missing. The fire is about 35% contained. It's destroyed 8,800 buildings, most of them homes. Near Los Angeles, a fire that's raced through Malibu is described as 40% contained. The blaze has killed 2 people. Former Federal Reserve Chairman Alan Greenspan warns that inflation is starting to make its mark in the U.S. economy. Greenspan talked with David Rubenstein for the latest episode of David Rubenstein Show Peer-to-Peer Conversations.
I think I'm beginning to see the first signs of it. We're seeing it basically in the tightening of the labor markets first, which, as you know, are getting very tight now. We're beginning finally to see average wages rise, and clearly there's no productivity behind it.
Well, you can watch all of that interview with Alan Greenspan tonight on the David Rubenstein Show. That is 9 p.m. New York time here on Bloomberg TV. And in Israel, it's a blow that could threaten the survival of Prime Minister Benjamin Netanyahu's coalition. Netanyahu's defense minister has quit in a dispute over the Gaza Strip ceasefire and pulled his faction out of the government. Avigdor Lieberman says should hold elections as soon as possible. He had urged Netanyahu to strike a harsh blow against Gaza's Hamas rulers after 2 days of fighting. Global news 24 hours a day on air and at TikTok, on Twitter. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Courtney Donahoe. This is Bloomberg. Bonnie?
Courtney, thank you. Fed Vice Chairman Randall Quarles has been testifying on Capitol Hill, providing an update to the House Financial Services Committee on the state of the U.S. banking industry. And Kevin Surley, Bloomberg's chief Washington correspondent, is there with a key lawmaker on the panel.
Thank you, Bonnie. We're here with Congressman Patrick McHenry. He, of course, is on the House Financial Services Committee, set to become the ranking member of the committee in the new Congress. Talk to me about this hearing, however. It seems like Republicans are quite satisfied with how Vice Chair Quarles is conducting his deregulatory policies at the Fed.
Generally, yes. I think there's a great interest among Republicans that they move more quickly. Right. That the regulatory agenda has slowed, and we want it to quicken throughout the financial regulators. I think we're in great need of that, especially with the economy and in the situation it's in, and the need for access to capital from my constituents to keep this economy growing.
And you asked him about technology.
Absolutely. I think there's a great opportunity for us to move forward with the next generation of regulation that permits and utilizes technology, including artificial intelligence, to have better regulation, more timely regulation for markets, for banks, for institutions. And there's sort of a great deal of conflicting information we're hearing from regulators on their interest in moving forward on that agenda, and that's what I questioned about and asked that they move more quickly on embracing technology.
So important, especially as these technologies are just developed so much more quickly than they had in the past. There was a moment in this hearing where Congresswoman Maxine Waters, the current ranking member, set to become the chairwoman of the Financial Services Committee in the new Congress, said quite publicly that she likes to keep people, quote-unquote, confused. She was joking, of course, about her relationship with the outgoing chairman, Jeb Hensarling. What type of relationship, Congressman, do you hope to have with the chairwoman on the Financial Services Committee as we head into the new Congress?
Well, in my time, I've passed 4 bills that are McHenry Waters bills.
Yes. People will be surprised to hear that.
Sure. Now, overall, though, my eyes are wide open. I understand from what she said publicly that her agenda is much more about resistance and about oversight and investigations. I think we have a great opportunity for us to continue the path we're on with better regulation, smarter movement, more focused attention on access to capital, more focused attention on the housing crisis.
I want to pick up on access to capital, and then I want to ask you about housing.
Sure.
But with regards to access for capital, that's like Jobs Act 4.0 type of legislation that we're hearing. Do you think there might be some bipartisan legislation that gets out? You mentioned that you've worked with her on 4 bills, but particularly in helping urban communities and rural communities, increasing access to capital, particularly for small businesses and underserved communities.
Well, I've talked about this for the last decade, that we need to do better for urban and rural, and the issues that we're dealing with in those two areas in our country are similar. I think there's a great opportunity for that. This, I understand, though, as the incoming ranking member, that the chair will set the agenda. It's really an open question whether or not Maxine Waters will embrace that, or she will embrace her politics of really more attention from the media and more investigations rather than substance. And I hope that we can actually be of substance.
She released an 8-page memo last week detailing in that memo a host of different regulatory issues that she would like to raise. One of them includes the CFPB. Obviously, you disagree with her on the issue of the Consumer Financial Protection Bureau, but how are you going to use the minority position in terms of on the committee to disagree with her? Or what do you see your role is, particularly on the CFPB?
Well, I think it's actually talk substance rather than politics. Much of that is about the show for the presidential election. Much of that is about politics rather than the substance of what regulators are doing. And so I'm going to focus on the substance. I'm going to focus on the impact on families and communities and institutions.
What about Deutsche Bank? What if that comes up with regards to the president's loans?
Sure. She can get on TV, or anybody can get on TV talking about the president's this or that. My interest is what are we doing to actually enhance financial inclusion in the United States, not about making some show about the president's business transactions from decades ago.
Another area of common ground, Wells Fargo?
Sure, and I've been outspoken critic of how Wells Fargo has taken on and
Position mapping is
that is built into the culture of those organizations, and something has changed, and something's amiss.
One of the areas that could be a potential bipartisan area is housing reform, maybe I'm being a bit too optimistic. Chairman Hensarling released some proposals in September with regards to outlining his housing policy reform initiatives. Do you agree with that? Would you make any changes to that? Where do you stand on that?
There is nothing new in the housing debate. What policy alternatives we have all been laid out publicly for at least the last 6 years. It's just a question of the political will through the House and the Senate to see this through. A decade ago, the federal government nationalized Fannie Mae and Freddie Mac a decade ago. We've got to move forward with housing finance reform. There are needs in rural communities and urban communities that are unmet now because the cost of housing, the cost and the access to housing. We've got to do better, and I think there's a potential opportunity for us to work for sensible solutions when it comes to housing.
Because back a couple of years ago, the Senate Banking Committee did release a framework, a bipartisan framework in terms of housing reform. What I'm hearing is that you're confident you might be able to get that with Chairwoman Waters.
Sure. There is that opportunity, but you got to put the puzzle pieces together and get the votes commensurate with those puzzle pieces. I don't think that the alternatives that Maxine has currently presented would muster a majority in the House, nor do I think the Senate compromise bill would muster the votes necessary in the House. So we've got to come up with some new way on this, and I'm very open to that and not dogmatic about my approach to housing finance reform.
We've got like 30 seconds left. You're going to be voting for Chairman McCarthy to lead the minority party in the House later this afternoon. Why is he a better choice than Congressman Jordan?
I've worked very closely with Kevin over the last 4.5 years. I've been in House leadership. I think he better represents where most of our conference is among House Republicans. He's done the political part. He's done the policy part. He has all the ingredients to be a great Republican leader in the House of Representatives.
Congressman McHenry, the likely future ranking member of the House Financial Services Committee. We covered it all. And maybe chairman one day. I've got a couple more elections before that to get through. Back to you, Guy.
Kevin, great stuff. Thank you very much indeed. Kevin Cirilli joining us from Washington. Politics front and center on both sides of the Atlantic. Don't forget to tune in to Bloomberg Radio's The Cable. That is with John Farrow and me. It's coming at the top of the hour. So if you're leaving the trading desk, getting in the car to commute home, DAB Digital Radio is where you'll find us, plus also on your Bloomberg devices. Clearly, one of the main events that we're going to be focusing on is what is happening down at Downing Street. We are awaiting the presser that we think is going to be delivered by Theresa May sometime at the top of the hour. The timing on this is a little bit flexible. Now looks as if it's probably going to be delayed probably until 6 p.m. or even 7 p.m., which is interesting in terms of the indications as to how long that cabinet meeting is going to be running and maybe some of the difficulties that are being presented within it. So the latest timing, 6 p.m. or 7 p.m. for that Theresa May press conference. We will take it live, though. This is Bloomberg.
When every threat is an opportunity to be more resilient, we work with you to find security in agility in every industry.
Ich bin nur zum Schauen hier. Ja?
Live from London, I'm Guy Johnson.
And from New York, I'm Vonnie Quinn. This is the European close on Bloomberg Markets. I want to check majors now because we've had a bit of a sell-off in the last half hour or so. We were moderately positive, and now we can see the major indices are negative by about 0.6% apiece. There are very few stocks in the Dow that are still in positive territory, 7 to be precise. And you can see as well that Bitcoin has been selling off today, down another 10%. Look at that. Right, this is our stock of the hour. California Utility, PG&E. Shares falling for a fifth day on the possibility its equipment sparked the wildfires in California. Today, though, the company added to shareholders' pain by saying it's exhausted its revolving credit lines. Kaylee Lyons is here with more. Kaylee.
Yeah, so Vonnie, you saw that chart down 28% today. Of course, a string of bad days. We can show you a 5-day chart. The company's lost almost half of its value in the past 5 days as these wildfires rage on in California. This, of course, because the company is being investigated, the possibility that their equipment sparked the fires. The reason this is such a big issue is that in California, utility companies are held entirely liable for any damages that from fires that their equipment sparks. They could have done everything right, but if their equipment sparked the fire, they are held accountable. And Citigroup out today with estimates saying that this fire, birthing Northern California, the Camp Fire, could reach a cost of about $15 billion that the company could be on the hook for. And of course, this is on top of the fires back in 2017 when state investigators found that PG&E equipment started 16 of those fires. Those damages estimates upward of $17 billion. So this is a huge liability for the company, and they don't have that money on hand. The company has about $3.5 billion currently in cash and equivalents, and then about $1.4 billion in wildfire insurance. So of course, this nowhere close to the $32 billion that they could be on the hook for. And so then the company, as you said, adding to woes today by saying they exhausted all of their credit lines. This was very abrupt, $3.3 billion drawdown. We can show you who some of the lenders were: JP Morgan, Wells Fargo, Citigroup, all with loans of about $232 million. But this happened very quickly, and some analysts saying that this could be on fears of a credit downgrade. I can show you what's happened to the company's debt that's due in 2034 if you want to hop into my terminal here, but their borrowing costs really surging. Back in June, S&P cut the company's credit rating to BBB. That was, of course, before these current fires, and at the time of that credit downgrade, they did say that another downgrade could be coming, citing fire risk. And so, of course, this is a company in serious financial distress, and Bloomberg Intelligence saying that the risk of bankruptcy for this company is very real.
Right. Well, we will continue to keep an eye on those wildfires and on PG&E, and of course a lot associated with those wildfires. Our thanks to Kaylee Lyons with our stock of the hour. Guy.
Vonnie, let's take you back down to Downing Street. We are awaiting the end of a cabinet meeting, which is increasingly being pushed back into the early evening. We now understand that Theresa May will exit that door and brief reporters. We don't think that is now going to happen until possibly 6 p.m. or 7 p.m. this evening. When that event happens, we will, of course, take it live right here on Bloomberg. From Vonnie and from me, this is Bloomberg.
When every threat is an opportunity to be more resilient, we work with you to find security in agility, in every industry, in every country, every day.
stock filled.